Hey everyone. So in today's video, what we're going to do is go over top 10 stocks to watch for next week. Most of these are, in my opinion, very actionable. And just to go through this list, it'll be at long-term and short-term ideas that we're looking at. So in other words, we're not looking at just long-term ideas, and I'm not just looking at day trades here. We're looking at essentially everything. So keep that in mind when you're looking at that. I'll talk about that a little bit more as we go through it, but just understand that we're looking at short-term trades and long-term trades. And I'll try to be a little more specific with what we're doing here. So I went through about, it usually takes me about 1,000 charts to get through to come up with this list and boil it down to 10. And I try to stay away from stocks, just so you're aware of this. I try to stay away from stocks that are coming up with earnings in 2 or 3 days. There are some really great charts out there, and I'll just throw them out there that to me look like they're, this looks to me like it's going to explode, right? This is NVIDIA. People know that have been in the newsletter, and if you don't get a copy of the newsletter, we can give you a free one every week on Wednesday. So just subscribe inside the description. But see this break here? Like, this is going to go. In my opinion, I think this is setting up to go. The issue is that I have earnings on the 18th. So it's very hard to step in front of these before earnings. This one, which was in the top 10 last week, decided to move, of course, on Friday, right? But look where earnings are coming out. Okay, they're coming out on the 18th. So both ZIM and NVIDIA simply are not going to make the list because of that. And I just think it's worthwhile pointing out that I'm trying to not put people in front of something that's going to come out with earnings right away. I'm looking for things that have confirmed or are far away from confirming. The very first one I want to go over, and people are already aware of this, we have a position in UPST at 172. I just want to go through this. I have this on the top 10 this week, and I want to explain why. So you have 191.89, right? So we said 192. So for those that are following this, that are in the community, we came out and said, hey, at 192, this is going to go again. Pretty clear it went again, right? There's a couple things to really look at what's going on here. And it's really important for us to look at this on a longer term basis as far as the events, and we'll get into that in a moment. But let's just get rid of these indicators for a minute. So this was the 192 level we were concerned with, right? Wanting to make sure we got through it. We got through it. And this is really important to understand. You see this evening star that's starting here, right? For those that have studied that candlesticks video that I post. See this? Okay, that should have broken, right? We're waiting for that to break. This wick is what? Price rejection? It didn't break. It did the exact opposite of break. It gap filled, well, I shouldn't say gap filled, but it filled that entire wick all the way back up in the next 2 bars. That's insanely strong. And what that's telling you is that any dips essentially are going to be bought, right? That's like a big glaring signal. And it's a little bit advanced, I understand that, but just when you see a wick like this, and then the next 2 bars get rid of that wick, because think about it, that's a gravestone, right? It's a gravestone doji. Like, that's about as bad of a doji as you can get from the top of a 15-minute, pattern. And we just ate it up in 30 minutes. It didn't even take all day. So that tells me that there's a lot of buying out there. Now, look at this. As soon as you hit that new high, right, and you rejected that 200, you flip that, and 200 is a psychological number. Now that you're above that, people are going to realize that, hey, if you want to own this, you have to pay 200 for it. But there's some things that I just want to address with this one. All I'm looking for here for a trade, right, and this is just simply a trade at this point because you're overextended, and we're going to discuss that in a moment. I think you're going to get up to this level fairly quickly. And then I think you're going to cross it. And I'm going to just point something out here. Let me just go through this so you can see where I'm going with it. Okay. So you're essentially looking at this, right? And I'm just showing you the UPST on the weekly. You're going to go to here. See how this weekly bar encompasses this entire price rejection? See how this weekly bar, right, encompassed this entire price rejection? We ate up everything out there that people wanted to get rid of. Everything has been eaten up. So as far as supply, when you look at this, you're going to see something like, let me just walk you through it and put it up here for a moment. So, and get to the volume by price. There it is. And let's post this for a moment. Okay. There's going to be no supply up here. And not only is there no supply, all this was eaten up within 3 days, not even a week, but we're going to call it a week. Second, when you have volume that's coming in like this, okay, so in other words, my volume spike is greater. Let me get rid of all this stuff and collapse that. So it's just easier to read. Okay, the first volume spike we had was the first time they earned a profit, right? Came in at a volume spike at 10%. Second volume spike was what? Here, okay? So what's important about these and understanding these relative volumes trading at 5 times volume and understanding when they're happening, the most important thing to understand is look how the volume's increasing, okay? So in other words, I'm over 1.8 million shares, okay? Here was 1.3 million shares and I was 5x volume, right? Now it's taking 50% more volume to get the relative volume to 5. So just very quickly, what does that mean? That means that you have more people that are buying the stock. That means you have more institutions that are getting involved probably, right? I think if you look at funds increased, we broke over 200 investment funds that are in there now, which is somewhat significant. It's like the first hurdle. So I'm just simply looking for it to flip this and get up to here. And I'm looking for that trade to get me in and up 205 to here. Okay, and then simply just move my stop up as I go, right, a trailing stop, and see that I break this. And I do think I'm going to break this. Now, a lot of people are going to look at this. I'm spending a lot of time on this one on purpose. But a lot of people are going to look at this and go, it's overextended. I'm not buying it. Okay, and that's fine. You have to do what you want to do. I just want to point something out. So this was one we traded in the group and did fairly well with it. And I just want to point this out. We bought this at 219 and we did okay with it. We made 150 points and 68%. But look, so if you had that same mentality here, and let's get rid of all the other indicators. If you had that same mentality here as, oh, I'm not buying it, right, because it's going to do this and it's not going to go, well, you missed the move. You missed 100%, right? Essentially, you could have made 100% at one point. Right? Now, when I mark these off in the newsletter, I'm marking them off from the stop. Some people obviously were trimming into this. I don't even take those percentages into my numbers. So just consider that when you're looking at my numbers. They're extremely conservative to what people could have made. But when you're seeing this and you're seeing a move like this, don't think it's over just because you got to a certain level. And as you start understanding these kinds of lines and starting understanding how to draw them, right? These top of channel lines, just because you get there and you reject, right? Here it is, and how you reject doesn't mean it's over. Okay, here it flipped. So that's what we're trying to do here. And what happened when it flipped from here? Just to put this in perspective, people think the move's over because you're up 35%. Okay, so if you think that move's over because you're up 35%, if you sold up here, you made another 59% on your new position, just breaking the upper channel. So what I'm trying to do here is I'm trying to get ahead of that flip because I think it's coming. For those that are in the newsletter, obviously we do nothing. This is a much longer term position from there. You can obviously consider adding to it, and we'll be moving that stop up, obviously. And I just want to, talk about this as well. Let me go through this one more time so people get this. See how 7 cents, 22 cents. So you have comparison year over year where you made what? Okay. Quarter over quarter, rather. So you made what? You tripled your net. Okay. People are going to look at that comp and go, oh, well, that's great. But can they do it again? Okay. They just tripled their net again, 22 to 6. Okay. So, and by tripling, this is the beauty of compounding, right? You've gone from 7 cents to 62 cents in 6 months. So the amount of growth that they're seeing is pretty substantial. And I don't think that's going away. So, and just to talk about this, I mean, I think you're going a lot higher. I think you're going a lot higher. I think you're going to flip this and go parabolic. So just keep it in mind. But you have to get in there and trade it, and you have to trade it tight because it's going to be, it can drop fast. So we're going to go through this, and this is in that group where we've had some winners already in the top 10 from previous top 10s that we've done. And let's just go through this so you can understand this. This was your point of control and you broke out of this, and now you're heading to this level. I think you're going to start flipping these levels. I think we're setting up for that, and that's why I drew this up there and I left it up there. But this is just an investment management company, multi-billion dollars. I think they manage over 150 billion in high net worth individuals and in funds. So what we're really looking for, I'm not waiting for this. This is really what I want to point out. You have broken down, right? You have a trend line right here, and now you flip this wedge and get above the 5 and the 8, okay? And your volume's increasing. So to me, this is getting ready to flip, right? I came up, I tested it. Look at the response and how fast we moved off of this. So really what you're looking for is very simple on this, and I'll show you another one that we did this with, 74.69. All you're doing is looking at going up 20 cents. Okay, the stop on this to start is going to be 72.26. You're talking about a $2.50 stop on a $75 stock, right? It's a pretty low beta move, right? And you have this trend line right here, and there's other ones where they're a little higher, but let's just use this one. You're going to just try and wait and see how it responds to $76. Okay, it might not get there right away. It might break through here. It could base. But what you want to do is you want to watch how it responds to this level. And if it rejects at this level, simply get out of the trade. It's not going to work just yet. It's going to do this, right? And what would you have used here for your rejection? Well, this was simple, right? For those that understand how to read candlesticks, your rejection was right here. You had a bearish engulfing right at the top of the channel, right against your channel line after this doji made you think that it was going to go up, right? And it didn't. Basically, you have a dragonfly right there. So what you're doing with encompassing this is, oh, okay, well, it didn't work. All right, well, I'm out. So I bought it, maybe I bought it here. It got up to here, and I'm like, all right, well, I made $2. I'm out. And then you wait. And now look, you didn't go through all this. You formed the wedge broke. So the goal is to get in and up. Now, it could grind. It could go straight, or it could just hit this. But you need to look at this line. So it's not really so much just saying you're looking at 75. I could be looking at, in 2 weeks, I could be looking at 79, right? So you have to kind of keep that in mind. That's how you should be looking at this, especially low beta names, because they can bounce like that. But to start, you're looking for that break, and you're looking for this right here. And I'm getting into a little more detail on education today, so this is going to go a little longer, but I just want to point this out. This was one that we talked about that did fairly well, right? It was just this very simple break that we were looking for here on this MC, and this is Moelis. That's also, they're an advisory company based on fixed income to Asia and the Middle East. But essentially all we're looking at was flip this line and go up, and then you just move the stop up and you stay in the trade. You see how it does. But I like that one. I like Aries a lot. TGH. Techstainer Group Holdings. So they're a container company, okay? And I know that's not the most exciting business in the world, but I just want to point something out here, okay? We came out with earnings. Look at the earnings and how they're growing, okay? As that's going, that's what people are looking for. They're looking for earnings, okay? So I'm going to leave, actually, I'll leave all this in just so we can go through it and educate. So, well, let's get rid of, we all can see that we're all above the moving averages, right? So let's clean that up, because I want to point out the cup and handle so you can kind of see it, kind of get it, where I'm going with this. So what's intriguing about this, even though I have all these lines up here that could be resistance points, and let's just deal with that for a moment. These upper trend lines, they could be resistance points. They don't mean that they are resistance points, but if you're in a channel, that they could be. And the issue with them being resistance points on a stock, they don't hold as much value as they do on an index. An index is a conglomerate, a group of stocks, right? So they're going to trade more in tandem together as one large group than just a stock. Stocks have different anomalies. It's why people that use technical analysis tend to trade commodities because they don't have to worry about, stock-specific risk. They just have to worry about the one commodity. Anyway, see this right here? The cup. So this is a cup, right? What are you forming? You're forming a handle right here. Where you're forming it right on this line here. What happened here? We had an evening star, it rejected, it came down. What happened here to reverse it? We had a morning star right on VWAP and it took it off. Okay. It's really important to understand these patterns, evening stars and morning stars. So now the question is, what do we do? Well, you have this wedge here. Do I really want to buy it up here? No, because I'm closer to this line. So, okay, so how do I get in this and stay in this and lose the least amount of money if I'm wrong? Okay, that's probably a statement you want to think about every time you put a trade on. So what you want to do here, right, is understand your risk, okay, and just simply wait for it to flip this line. 36.27, okay, and your stop's 35. And look at this shelf. Right? So in other words, what we're doing now is I'm using supply to my advantage as a support versus using it as resistance if I was buying it down here. So get that, flip that level, and then start seeing how you act with these 39, these 40 levels. And if they go and you can get above them, you could wind up getting up here to that 45 level. I think that you can get up to there pretty quickly on it. So this is another one that I like, and I think it looks fairly well. And it's a completely different space than probably a lot of people are looking at. You know, and you can see what's going on here. You're having an issue with that number, right? See how you have an issue with it? So getting above where we want to get above gets us what? Above that number. So keep that one in mind as well. CCRN. So I should probably do this on the daily. Be a little cleaner on this one, actually. And let me just put this up so that you can see. So this is another example of that pattern that I was just talking about, isn't it? So let's just go through this, and then I'll throw in the moving averages. So here we are again. Here's your cup. I break out. And this is a really good lesson. See this volume, how it comes in? Okay. And people are buying up here. And they're going, oh, I got to get in this. It just crushed. I got to own it. I have to own it now. Well, this is why I always tell people you need to wait for follow through. This is a classic example of why you need and you must wait for follow through when you have an event like this after earnings, unless you're buying it off the rip, right? But then if you bought this off the rip, meaning bought it off the open, then you went and then you got stopped out here, right? Unless you're willing to just deal with this, you know, and then it could pull what we saw with Disney where they just collapse. But what you're seeing here is you're seeing a wedge. Well, what's that wedge forming? Okay, here's my cup. It's forming a handle, isn't it? Okay, so there's my handle. Breaking out of this, right? This volume's not going away. That's not going, we all agree on that, right? It's not going away, that volume. We just came out with earnings. This is what we got. So we can't unring this bell, which means the volume is stable, and that's something that we can rely on. But now what we need is just to flip this level. Because if you can flip this level, right, all you're doing is trying to get above this line. You can use 1930, right? And my stop is 50 cents on this trade. Okay, it's literally a 50-cent stop. And I have all this support in here, right? Once I flip this level, I should never take out this low. If I do, just get out of it. Just move on, okay? And you should be able to get up to this level in time and grind up there, and that gets us to $24. But this is definitely something that I find interesting. It's a different space than, you know, you'll see a lot. You know, you're in the healthcare space, and it's a smaller company. It's not a huge company. But I do like this trade, and I just don't think a lot of people are paying attention to it. And their earnings were excellent. And the volume's coming in, and you have a shelf here with a cup and handle for support. It's beautiful. So this is one that I've been watching for some time, and what we're going to do is I'm just going to get rid of this volume by price to clean this up. And you see this a lot with this name, and what we're going to do, and let me just get rid of all these for a moment because there's way too many of them, okay? And we'll get rid of this middle one. And we can get rid of this one too. Okay, so what we're seeing on RH, Restoration Hardware, put these back in. Okay, so what you've done here is you ran up to this line, you've attempted it and failed, come back down to 650, attempted it, failed, attempted it, failed. What I like here is, see how we open here? See how this bar, look where this bar closes. Right? And yes, I do get into this level of detail because it's important for the way that I trade. But you see this 1719.63? What couldn't we close below since we broke out there? 1719.63. What does that tell you? That tells you you have a buyer there. Now, if you really want to see something fascinating with that level, okay, let's just take this level out just a little bit further. And let's just drop that. Isn't that interesting how that break and that close just coincides with bonk, 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 right? So what happens to a level when it flips from support to resistance, right? Resistance to support. So in other words, this was resistance, and now what has it flipped to? Support. Okay. If I close below this line, I want out of the trade. Why? Because this will become resistance again. That's your stop. In regards to this, what you're looking for is you really want it to get above that 744.56. Okay, that's really what you're looking for. Now, what we're really aiming for here is to get up and in this and stay in it, because when you do, it's really a beast. If you look at how it's been running, right? You're up 7-fold from when the pandemic started. So, but you have a trend right here is what I'm trying to capture. Okay, and I'll just draw the most conservative one. And what I'm trying to do is get in this to stay in it for this move, right? That's what I'm trying to do. I'm trying to find the right price to get in it, to stay in it for that move. Put this RH up here. Flipping this level, if I flip that level right now, it gets me to 900. Okay, if this level takes its time to work, right, this could be a 4-digit stock. So this has massive, massive potential. And, you know, there's some things there that people are looking at that they're knocking where, we're kind of seasonal, right? So you can kind of see that, your big quarter is going to obviously come up after Christmas for whatever reason, but that's your quarter. I mean, they're a consumer-based company. So consider that. I like this one a lot, and it has a lot of room to run. This is an old company, Ingersoll Rand, and people are familiar with this name. And, it's interesting because it's one of those companies that goes public, goes private, goes public. It doesn't matter. But here's what's interesting about it. Okay. See that? See this? Look, you've been basing since March. Okay. Came down, tested the 200-day, came down, tested the 200-day. You had 2 levels up here. The one level you were unable to get above except one time and close above was this 51.61. What did you do the other day? Closed above that. What have you not been able to do after that at all? Close above 52.02. What did you do on Friday? Closed above 52.02. So I could see this getting back once I'm out of this base, I'm heading back to the channel, right? So that's really what you're looking for. Get me out of the base and get me back into the channel, right? That's really what you're going for here. And that's what I see happening here with this. So what I would focus on is very simple trade. This is very simple stuff, this one, okay? You're looking for, and let me just make sure that this is right. Let me make sure it's perfect. So you're looking for 52.66. So let's call it 52.75 is really what you're looking for here. Flipping that level, see how these are all expanding to the 8, the 21, the 50. See how they're widening away from each other? That's exactly what you want to see. As they start pulling away from each other, it starts meaning that you're looking for a positive move or a move in that direction in which way they are spreading. So if it was going down and they were crossing, that's what's going to happen. If they're going up, that's what should happen. So I really like this. But getting above that line, and this old stodgy company, just right now, you're looking at $60, right? You can follow that line, see where you're going, and you can see how it keeps going. And what's my stop? A close below 51.61. So I have $1 risk for 8 or 9 points. So my risk versus return on this is 8-1. And I don't have to worry. I'm not going to lose any sleep over it. It's Ingersoll Rand. It's just going to grind, right? That's all it's going to do. So AMD is one, and I'm going to look at this as a trade. And I just want to point this out there again, and I mentioned this a little earlier. You have risk in this space this week, and that risk is NVIDIA. Okay, NVIDIA is clear risk with their earnings. Okay, they are really going to move the semiconductor market one way or another on the 18th. So just keep that in mind. Now, with that said, on AMD, this is what I like about it, and this is all I'm looking for out of it. You see the top of this channel? I have no bones about them breaking the top of this channel. That's not really where I'm going with this. I'm looking at it as a trade. What I did here was run up. Everybody wanted to own it. 1, 2, 3, 4. Look at this for a second here so you can understand this, right? So this is what happens with these patterns. 1, 2, 3. See how you have 3 long red bars in a row, right? It's called 3 black crows. It's a very negative pattern. Come down, sell, but when these patterns break, even this candlestick pattern in and of itself, you'll test that area again. So I have no bones about, I'm not trying to see if this is going to break up here and go to 140, 150. I'm simply looking for a trade. I think that what will happen with this, now that you're above the 8-day for the first time since you sold down, based, right? Here's your long-legged doji, which was right on that wedge line. Long-legged doji signify what? Uncertainty. And then we made a decision, and we clearly made a decision because it picked which price rejection it was going to go over. You get above the 8-day, and now you can keep going. What you're really looking for here is to flip this line, 111.71, and then you're looking for 117.68. We're looking for a trade. A close below the 8-day or breaking below your 8-day, depending upon how you trade, should have you out of this one. It should have you not wanting to be in it. And it's just a very simple trade. Mrvi. So Mrvi here is one that people will know that we played around. If you're in the community, you'll know we played around with this around 44, 45. And then I think it broke out again here. I have to go back and take a look at the pre-market newsletters. But breaking here, and then we were going to go, and I said, hey, we're going to get up to, we can get up to 50. We can flip this level. We flipped it. But there's something that I really want to point out here and why it's on this, why it's on here. So this is my parabolic line. When you break the upper trend line, right, to the upside, you can go parabolic, okay? This, what we've seen so far, this really is not parabolic. This is starting to become parabolic, okay? And I know it's overextended off this line, and of course you always want to buy it cheaper. We don't have that luxury, and there's a couple reasons why we don't have that luxury, but we're going to get into it. You don't have that luxury because of this, right? So you're not really going to buy the day of earnings, are you? No. Okay, so then you think you're going to go, and then you run up, and then you open, and you have this long red bar down. Look what transpired with that red bar. Okay, look at what happened with that red bar. We got rid of it in 2 days. We got rid of that red bar, that enormous, huge, red, nasty bar we got rid of in 2 days. Okay, now 13 cents, 26 cents, 44 cents. What's happening to my earnings? They're doubling. My earnings are doubling every single quarter that we've been coming out. That's not something to not look at, right, in regards to earnings. Pay attention to it. Don't trade off of it, but be cognizant of it. Now, all I'm looking for here is a trade. Get above this 59, and you can keep going. You're going to have to use this 55 as a stop until you flip up and then just start moving your stop up, however whatever your system is. But this could go. This could really run. Once you're through this and all these people just realize that they're out and they sold out of it, you're going to get a big push of FOMO here. And you can see this go. You could see this continue to run. So just keep that in mind as well. Now, in regards to this one, this is pretty interesting because it's a little different. And it's a newer issue. And let me just throw this up here. So what this one is, and what I like about this one, you're newer, and they're a Symbols Napa. They're a wine company, right? 50 countries, I think. But here's what I like about this. See this pattern right here? And we can get rid of these indicators for a moment. This pattern right here is a cup. What's this? It's a real handle. Okay, so let's look at that handle for a moment. And then we can clone this, right? And when we clone them, they get the true trajectory. And then we just kind of see where it fits in. Okay, so there's your line. There's your handle. All right. So in other words, I broke out of the handle and popped back into it. So instead of waiting, this is a different kind of trade, obviously, but instead of waiting for it to get back to this level to make a decision on this new issue, and this happens with new issues, right? They bounce around, they try to find their footing. What we're looking for, I'd like to see some more volume here, but get me above this 50-day on this long-legged doji, right? You see how we're down here? And it's not really a dragonfly because you're not at the top of it, but flip this here and you still have a morning star that should get you up to 2284. Now, if that gets you up to 2284, that breaks me through what? This wedge line. If I break through this wedge line, I'll have been through the 8, which will be down by then, right? One or two more days and this line's down. So I'll be above the 8-day. I'll be above this and I'm out of the wedge line, which gives me a clear shot of getting a 24. Getting through that 24 level can take me to here. Okay, can take me up to this line, right? So then I'd be looking for getting up to here, $26, $27. And I think that could be where you're heading here. You know, this is just trying to find its footing. I'll take a moment, just point this out as well, right? So you can people see that. And you could be uber technical, right? And taking a look at that one as well too, right? So it depends how you want to really view it. So as I always say, charting is an art and a science, but what you really have to think about is, wow, I'm at the bottom here. Maybe this is it. Maybe this is the flush out. And if it's not, and I get above here, what do I lose? $1? $1 for the opportunity to make how much? 22 to here? 5? 4? Let's call it 4 with slippage, 4 to 1. You should be looking for 4 to 1 trades every single day, right? If you're right 50% of the time, you'll be making a killing once you learn money management. So finally, the one I want to end with, and this is one I got asked a lot about. And again, I don't buy stocks in front of earnings because you don't know what they're going to pull. You don't know if they're going to pull a Sophie or a Wish, or you don't know if they're going to pull, a UPST. You really don't know. And it's, so it's not even if you're right about the earnings. You could have blowout earnings and still come in, right? So as this event, we had great earnings, but you could pull a Disney, okay, which had great earnings and then just sold down. So you really have to be careful, and you always want to have a cushion before an earnings event. I use 10% as a guideline. I would recommend that you look at something like that as well. But let's look at what's going on here, right? We had earnings. They absolutely crushed. Everybody responded perfectly to those earnings, and then what did we see happen? Now look where we closed, okay? So we couldn't get above the flag until Friday. And then very quietly, what did we do? Close at an all-time high. You don't need much here. And that's why I like this trade a lot, because it's a big mover. But all I really need is 675. 675, and just don't close below 663.64. That's all you're looking for. And this can go parabolic. So, you really, when you're looking at this and trying to determine where it's going parabolic, the only thing that I find helpful is just to draw your fib levels. And what I look for is not only the year. I don't use a year. I try to find a peak and a valley, because that's where you had the most human emotion, right? And that's really what fibs are, right? They're really just a determinant of where human emotion is going to go. And you can see that all throughout, I won't get too esoteric on it, but you can see it all throughout human history. But if you look at this, 675, you can get up to 818 pretty quickly. And I think that that's what's going to happen here. I think you're going to have a pretty powerful move, all for risking $10. So $10, and I'm telling you that you could possibly see an $800 stock, right? So you can see where you're almost looking at like 12 to 1 risk versus return, which is pretty substantial. So keep these 10 in mind. As always, please comment on them. Let me know which one of these you like the most. I always like hearing in the comments which one you like the most. And it's always interesting because people talk about they can hear it in my voice, which one they want to pay more attention to. So I'm always curious about that. Anyway, have a great day, everybody.